This is episode 11 of the Bitcoin price report for December 16th, where we discuss the macro, the micro, fundamentals, and technical analysis with a focus on the Bitcoin price. Today, Bitcoin was 16,861 in the afternoon, down 0.5% from just about 2 weeks ago, December 1st. Bitcoin is still consolidating between 15,500 and 18,500 and nearly reached 18,400 last week before falling back to 16,800. Weekly MACD points up. The CBBI.info index is at 5, still in the undervalued range. The Pi cycle measure that predicted the previous peak seems to show Bitcoin may have already bottomed. You can see it turn up just very recently in the last few weeks. The net realized profit and loss indicator also shows a potential turnaround in recent weeks. These two indicators are part of about 10 indicators in this CBBI.info index. Our DCA and limit order strategy allocation is unchanged and is down 2.17% from inception. Onto some technical analysis. S&P 500 closed at 3852, just at the midpoint of support at 3600 and resistance at 4100. The Dow is at 32,910 after being rejected at the 34,300 resistance. The Nasdaq QQQ is at 11,243 with support at 11,029. The 10-year yield fell to 3.49% with support at 3.4%. Gold is at 1792, still near resistance at 1809. The monthly and weekly MACD is pointing upwards. Oil is down to 74.5 with support at $70.26. The dollar index is at 104.837, just below support around 105 after hitting a low of 103.56. The pound is at $1.21 at resistance, but above support of $1.2. The euro is at $1.058 and at resistance, but above support at 1.036. The yen is down to around 136.68 yen to the dollar, with support around 131 and resistance around 138.7. Looking at the macro, the first bearish data point is the TLT to IEF ratio. Michael Gayed of the Lead Lag report on Twitter says conditions favor an imminent market crash. He suggests a potential spike in long-term bonds versus medium-term bonds. That's a warning sign. Investors seem to recognize the hawkish stance of the Fed as they increased interest rates by 0.5% despite softening inflation. Commodities are also underweight versus bonds, suggesting expectations of recession and a slowdown in economic activity. On the bull side, the weekly ECRI continued to move upwards the past several weeks, and Larry Williams' cycle indicators suggest markets may make a strong run until the end of the year. So although the macro bearish case seems stronger between now and early next year, a balanced approach may be appropriate, especially as microeconomic indicators of Bitcoin are trending upwards in the undervalued range. That's all for this week. Please like and subscribe, and see you next week.